And welcome back. This video is a brief recap of how Nifty behaved today on 6th of May. A very quiet and a sideways day today for almost 60 to 70 bars here. We had a brief swing on open for almost 10 to 12 bars and then sideways for the rest of the day. And that has been the case for a lot of prior days now. If you look at all the bars to the left, for almost 9 to 10 days, we have been stuck in a very tight trading range. If you remove this day where we had a brief bear breakout, which reversed up, and this day where we had a failed bull breakout, which reversed down, we have remained in a very tight trading range, a very quiet days. Disappointing for the ones who are looking for big swings, who are looking to make big profits, who are looking to hold on to their trades for at least a couple of hours. Every day we have been getting just a small swing on open, and then we've entered a tight trading range. Today, we had a wedge bottom on open, a brief bear trend from open, and then we entered a limit order market here. Yesterday was completely opposite of how today looks. Today, we had a wedge bottom. Yesterday, we had a wedge top, and we entered a tight trading range. If you look on 30th of April, we had a parabolic wedge top and then a tight trading range. On 29th April, we had a brief bear swing and then a tight trading range. And that has been the case with a lot of prior days. Swing on open for about 10 bars and then a limit order market. Very few trades, very difficult to make big profits on days like this. Why is all this days being so quiet? Why is this happening? If you look at the daily chart, we had a bear spike and a channel. We reversed up. The market usually tests the start of the channel. We had a strong bull trend here from 7th of April. However, if you look at the price action here, it has been disappointing for the bulls. We have a lot of dojis and bad follow throughs on bull bars. A lot of tails. So disappointing for the bulls. The bulls want to buy on a pullback, at least somewhere near EMA. The market is far away from EMA. The bulls are not willing to buy this far from EMA when the price action looks like this. The bears, on the other hand, they know that whenever there is a bull breakout of a bear channel, the market usually tests the top of the channel, the start of the channel. And they are willing to sell higher somewhere around this area. So bulls want to buy a pullback somewhere around EMA. The bears want to sell somewhere near the start of the bear channel. So there's a lot of confusion here. Not many bulls or bears are willing to take trades at this price, which is causing all this confusion, which is causing all this hesitations and dojis and quiet limit order markets. And I think the market will continue to remain this quiet until we have a gap up and a buy vacuum test of this bear channel start, or a gap down and test of EMA, or somewhere near the bottom of this trading range. Not many traders are willing to buy somewhere in this area. So the market has to either move up or move down to find buyers or sellers. Okay, coming to the 5 minute chart. Yesterday we had a very small day of the previous day higher and the previous day lower. Also yesterday, after this wedge drop, we were stuck in this trading range. Okay, yesterday we had a very small range. It was just 123 points. If the market wanted a strong bull trend from open and a breakout out of all this trading range price action, it could have simply opened gap up above the previous day high. The same is the case if it wanted a bear trend from open, a strong bear trend from open, it could have simply opened a gap down below the previous day low. The overnight traders wouldn't have to put in much effort. The range was quite small. They could have simply opened gap up or a gap down if they wanted a strong trend day. However, we opened somewhere in the middle of yesterday's range. That makes me think that today will be another trading range day, another sideways day. We might find buyers below. The breakouts are going to fail. So any breakout below the previous day low or below this trading range low might find buyers, or any breakout above the previous day high or above this trading range high will find sellers. Okay. So Bhavan, big Beva closing near its low, double top with the previous day high. It is also a failed bull breakout above this trading range and reversal back down. However, when the market is inside a trading range, if you look at all the bars to the left, then the market is clearly in a trading range. In a trading range, you should be looking to buy low and sell high. This bar is forcing me to sell somewhere in the middle, somewhere near the lower third of the trading range. and I'm not willing to do that. I will sell low only once there is a clear bear breakout below this trading range low along with follow through. Right now, I'm only looking to sell higher. So I would wait. Bar 2, consecutive bear bars, the market is clearly always in short. However, we are yet to break out below, more likely buy somewhere in this area. Bar 3, bear doji. Now this is interesting. First bar, we had a big bear body, then a smaller, and then a very small bear body. The bears are losing strength here. The bodies are shrinking. Also, we are somewhere near the buy zone of this trading range, so more likely buy somewhere in this area. Bar 3 is also the close of the 15-minute bar. If you look at the 15-minute chart, this bar is closing somewhere near the bottom of this trading range. It failed to close below all of this trading range price action. And since it is closing above near the buy zone, there are more likely buyers on the close of this bar than sellers. And that is what happened on bar 4. You had a bull bar closing in a rich high, big bull reversal. However, can you buy above this bar? No. More likely, the bulls who bought the close of bar 3 will be looking to scalp out here. And this is somewhere near the top of this trading range. And it is also about a 50% pullback of this sell off on the open. So, more likely, sellers on the close of bar 4 and higher. Bar 5, bear reversal bar, we found sellers on the close of bar 4. However, the problem with this sell signal is again the same thing. It is forcing me to sell somewhere in the middle of this trading range. I want to sell higher. I don't want to sell somewhere in the middle. The probability is always going to be low if you sell somewhere in here. You can do that for a swing. You can do that only if you are willing to hold until you get a reward of 1:2. However, higher probability is to wait for a clear bear breakout below all of this trading range price action. Okay, so market did get a breakout on bar 8 and bar 9 below all of this trading range price action. Let me get rid of the previous day low. I think the trading range low is more important right now. We have a bear breakout on bar 8 as well as a good follow through and a 5-hour bear micro channel. Looks like we are going lower. This is a high probability sell to close bear trend. More likely sellers at the close of this bar as well as somewhere near the high of this bar, attempting at least a second leg down. Bar 10, bull reversal bar, but after a 6-bar bear micro channel, more likely sellers above. Bar 11, this is a low one sell signal bar. It is weak because there is a prominent tail at the bottom. Weak sell signal, however, it is coming after a 6-bar bear micro channel. And there is also a gap between the high of this bar and the low of bar 3. Let me mark it for you. Yeah, there's a gap between this high and this low, which makes me think that we might get a possible measure move down. We have a breakout and a follow through. We have a pullback and a low one sell signal here. Reasonable to sell below bar 11 for a possible measure move down. Now this is interesting. Bar 15, we have 4 bear bars here. However, the bars are getting small. Also, this is a possible wedge bottom with bar 3 and bar 10. Also, there is one interesting thing about this wedge bottom. The first push in this wedge bottom had a strong reversal up. The second push had a good buy signal. Yes, we did not close this gap, but the buy signal was strong. Strong reversal on the first push. Second push had a strong buy signal bar. Third push again has a bull bar closing near its high. Also, the bars here are getting smaller, which makes me think that the market might possibly have entered either a bear channel or a trading range. We have a spike on open. This two are spikes, bar 8 and bar 1. And this might be transitioning either into a bear channel or a trading range. Also, bull bar closing near its high makes me think that the sellers will not enter at least for next 5 to 10 bars or at least for 2 legs up. Bar 19, this is a small 2 leg, second leg up on a smaller time frame. However, it is a 6-bar bull micro channel. It is a reasonable short below bar 18 with a stop above bar 11. However, since it's a 6-bar bull micro channel, higher probabilities to wait for a second sell signal, which we did get on bar 22. Second entry short, it is also a wedge bear flag with bar 16 and bar 19 and a lower high double top with bar 11. Reasonable sell here for a possible test of low. We did test the low here. However, look at this carefully. Once we broke out below bar 10, we did pull back above the bar 10 low. So what are the chances once we break out below bar 14 low that we will pull back above bar 14? This is the bear channel and the pullbacks are overlapping the prior lows. So more likely we are going to pull back here. Also, another way to see this as a wedge with bar 10, bar 14, and the third push bar 30. Also, a possible nested wedge here. Breakout, pause, and another 4 bar breakout, and then reversal up on bar 31. Different ways to look at this. Either a double top, failed breakout below the neckline, reversal up, or a wedge bottom, or a final flag reversal after this side trading range, or a lower low double bottom with bar 14. The point is that we will get a pullback and a deeper pullback. Why am I expecting a deeper pullback here? Look at the pullback prior to this low. Here, the pullback was 3 pushes up, a low to short, or a wedge bear flag double top. So I will be expecting at least a low to and or a wedge bear flag somewhere around EMA, somewhere near this prior high before looking to get short. What about selling below bar 33? As I said, this is the low and sell signal and it is coming after a strong bull bar. So low, not a high probability sell below bar 33. Also, after a wedge bottom, we usually get 2 legs up. So more likely bias below bar 33. What about selling below bar 38? Double top with bar 21. Also a double top with bar 11. Lower high in this possible bear channel. However, look at the rally here. The rally is too tight and the sell signal is too weak. I would wait for a better sell signal, at least a second entry short, or a strong reversal down before looking to get short here. Not a high probability sell below bar 38. Bar 40. This is the second entry short. It is a micro double top with bar 38 high and a reversal from a lower high in this possible bear channel. However, does this bear channel looks strong enough to you? We have had deep pullbacks here, a deep pullback here as well. And we have a lot of bull bars in this entire bear channel. Yes, we have lower highs and lower lows, but the market is more sideways than bearish. This makes me think that if you did sell below bar 40 or below bar 38, or somewhere around this high, we might not get a new low. Instead, we might reverse somewhere from the lower third of this trading range. And instead of continuing in a bear signal, this might transition overall into a trading range. Look at the follow throughs after bar 40. 4 consecutive dojis. This looks like a limit order market now. Nothing is good in this market for stop order trades. Higher probability is to wait for a clear breakout up or down. This is so small that you will barely be able to make money. This is barely 30 points. Any trade in this limit order market will make you lose money. So best is to wait for a clear breakout with follow through before looking to take any trade within this tight trading range. No clear breakout. We got a breakout here but a reversal. And the same thing happened here. We got a bear breakout that to reverse the back up. There's no clear breakout all day long except the last bar here. You could sell any of these bars or buy any of these bars, but the probability is never going to be high enough. You could say, oh, you must to sell below bar 72 low because it was a double top with bar 58. Yes, it is, but it is only for a swing. The probabilities are always going to be low in a tight trading range. And because since it was too late into the day, selling here for a swing did not make much of a sense. We did get a bear breakout and the market did fall exactly for the measure move here. However, not many would have been able to take trades here. Very quiet day, very sideways. Yo, trading range yesterday, we broke out below and then we made another trading range here. Let me get rid of all the lines here. Very quiet day. Not many trades today. If you did trade carefully, buy low and sell high, and you did take quick profits and quick scalps, you would have been able to make some money. But not many were high probability and easy trades today. Okay, so what do we expect for tomorrow? As a trader, you should be hoping, you should be praying tonight that either the market opens a big gap up or a big gap down. Why am I saying that? Look at this. If you connect the parallel from this two, the market is somewhere moving in this trading range. If you open within this channel, what do you think is going to happen? The market will continue doing the same what it has been doing for the past 2 days. It might have a brief swing on open and then might will go quiet for the rest of the day. So as a trader, you would want the market to either open below this bear channel or above this bear channel. So understand the psychology. Look at the daily chart. The sellers know, the bears know that after a bull breakout of a bear channel, the market usually approaches the start of the bear channel. So they will be willing to sell higher. Bears are not willing to sell here, which is what is causing confusion here. They will be willing to sell only if they get a follow through after this bear bar. And for a follow through, we need to open at least below the previous yellow. So if we do open somewhere near the previous yellow or below the previous yellow and have good follow through on open, a strong bear trend on open, we might have a big bear trend day tomorrow. Because I don't think there are much buyers left, at least somewhere near till daily EMA. The market might have to pull back deeper before it finds buyers. So if we do open flat or if we do open gap down and if we have strong follow through on open, strong selling on open, a lot of bear bars on open, we might get a big bear trend day all the way to the daily EMA, which is somewhere around 24,000, 23,900. If we do open gap up, the bulls might have a buy vacuum test of this bear channel start, which is around 24,850. But if we do open flat somewhere within this bear channel, we might have another quiet day. So that's it. Thanks everyone for watching. That's it. Best of luck for tomorrow.